Sorry about that, everybody. So I'll do real quick what I covered. That you have some options available with this application that are helpful. You can choose an alternative payroll covered period, and that is if you have biweekly or weekly payrolls normally. And so if you're doing semi-monthly or monthly payrolls, you may want to consider switching. I don't know if this can go retroactive, but whatever. That was some advice I found somewhere. I think Forbes article said that. But instead of using the day the deposit goes in the bank and having that 8-week period, for payroll and related costs, you can choose the pay period start date that is right after you deposited the money. So the example I used, I think, was a deposit on April 30. Let's say the pay period began on May 3. You then have those pay periods, 2 pay periods, not necessarily the paycheck dates. The other thing it allows is this accrual basis. And that means that if there's some leftover time at the end of that 8-week period, you can pick that up and add it to your payroll costs. So let's say, I think in this option, there may have been 6 days that would fall within the 8-week alternative covered period. And as long as it's paid on your next regularly scheduled payroll, you're going to be able to count that in payroll costs. So you'd have 2 full payrolls in a little bit. The way the math worked on this, it's going to be different for everybody. Now, other costs, I want to be very clear. This option to choose a different pay period or a covered period, only applies to payroll costs and related. It does not apply to mortgage interest and utilities, rent, etc. But that even can be on the accrual basis. What it says here, if it's paid during the covered period or incurred and paid by the next regular billing date is in the instruction. So what that seems to imply is, again, you could prorate if your phone bill, you get a number of days in there in your phone bill prorated. It's not paid till after the 8-week period. You still get to count that on an accrual basis. So those are some helpful options that everybody needs to be aware of. There are a lot of calculations in this, actually, and we stand ready to help as usual. Now, here are some rules. Some of these are reminders. The other costs cannot exceed 25% of the forgiveness. Now, that doesn't mean if your payroll costs aren't 75% that it's all off. It's just prorated. Payroll, and we'll show this. The example will make this clear. We'll walk through each bit of this, so I'm just going to hit these quickly. Payroll costs are reduced by pay reductions for individuals over 25%. So during this covered period, if you've taken somebody and you've halved their salary or you've cut their pay, and it's more than 25%, you subtract that amount from your payroll costs. And this is a really big one, and this impacts I was surprised how much just a slight change in full-time equivalent, that's FTE is like full-time equivalent number of employees. That if that isn't 100%, it will really reduce the amount of forgiveness. This forgiveness is also reduced by the EIDL grant receipt. Now, it depends on your other costs. That may or may not mean that you've got to pay some of that back. Now, one thing that's very clear here, too, is that payments to self-employed and partners equals the amount paid during the covered period or 8 weeks of 2019 profit, whichever is lower. So if you remember, if you're a sole proprietor, what happened is you took your profit on Schedule C and you divided that by 12 months and you multiplied it by 2.5 months and you got an amount. And that was the amount of loan you qualified for. Well, now what is going to happen? It's going to be either the amount that you pay yourself during the covered period, and it doesn't necessarily say anywhere in here it has to be weekly or whatever, which I've told some people to do, or during a regular pay period because there wasn't guidance. But this just seems to glorp it in the fact that it's during the 8-week period. You need to make sure you actually pay yourself. And so what does that mean if you're a sole proprietor? You really probably do. You just take money out of your business account and put it in your personal account as a distribution equal to what you had in the loan that you qualified for. And we can help people do these calculations. All pay is capped at this $15,385 for the period, and that's the annualized $100,000. So one thing that I think is good about this as well is it seems to be there was some confusion before, like is that annualized per pay period? So if somebody gets a bonus one week, and does that mean that puts them over 100,000 annual, which is what I thought it meant, and other people, other practitioners. But basically, it's just saying during this 8-week period, pay is capped at 15,385. That's annual. That's annualized 100,000. So that's a review of some of the rules. Now let's switch to this walkthrough example, and I'm going to let's see if I can move this over. Okay, hopefully everybody can see this screen. So I put some key information and options up here for assumptions to walk through this. The date the loan proceeds were deposited, the amount of the loan, number of employees. These are things you have to report. This company got a $7,000 advance or a grant. They pay biweekly. Now the covered period, and this applies to other non-payroll costs, is 56 days, including the date of deposit in the example they have. So this period goes from April 30 to June 24. You have the option to take the alternative payroll covered period. And so let's say that I think that was a Sunday or a Monday, 5/3, I don't remember exactly. But let's say the pay period started then after the date of deposit on the 3rd. The period would end on the 27th. You can also elect to choose the baseline full-time employee count period. You can use average full-time employees from February 15, 2019 to June 30th, 2019. So that's last year. Or you can go from 1/1/20 to 2/29/20. So you're obviously probably going to want to do the math, and you are going to want to do the math, believe me, and pick the period that has the lowest average full-time employee. Okay.
What about companies with multiple pay periods?
Multiple pay periods. Hopefully they're biweekly or weekly. That's one we may have to get back to you on, because the language just said it should be biweekly or more frequent. So I guess you can pay people daily, that's fine, or something, or weekly. But multiple pay periods, that's an interesting question. I'm happy to say I don't know the answer.
Owner is paid monthly and employees paid bi-weekly.
Pay the owner, switch it and pay the owner biweekly. Make sure the owner gets paid on the same schedule as the employees. That one's easy. If you didn't hear, that was one where the employees are paid biweekly and the owner is taking out a check monthly. I would immediately switch that and have the owner paid basically at the same payroll schedule. So the rest of this is kind of the application itself and shows the amount of forgiveness. But I want to go somewhere else first, and this is the detail that this is where this comes behind. So you actually have to send in a list of your employees, the last 4 digits of their social, their cash compensation, their average full-time equivalent. And I've added some things in here to help calculate this wage reduction. I want to note that it's clarified in terms of what it means by full-time equivalent. That is the average number of hours paid per week divided by 40, rounded to the nearest tenth, and it's capped at 1. So I mean, in other words, if a person works 50 hours a week, that's a one person. That's one employee. If a person works 30 hours a week, that's 30. That's 30 divided by 40. That is 0.75 or 0.8 if you're going to round in the nearest tenth. So that is about an eighth of an employee. You see, there's an alternative calculation, which is 1 for employees working 40 hours or more and half for others, just to make it simple. Anyway, for what that's worth. So what I've done here is I've thrown in some folks, and I said, okay, here was the actual cash compensation paid during the alternative payroll period. And this person normally doesn't work. They normally work 30 hours a week. We had to reduce their pay during this time because of coronavirus. And this reduction was more than 25%. So this 720, since it's more than 25%, does count. Now here's another person and they work full time and we didn't reduce their pay, et cetera, et cetera. But we got to this person here and they only work, pretty much half time. But no, it was up here. I did it. This person, we did reduce their pay a little bit, but it wasn't more than 25%. See, what was that percentage? I think I forgot to pull this down. So it doesn't count. As long as it's not over 25%, it isn't a wage reduction that gets counted for these calculations. So anyway, then you total this up. So this is this is for people that are receiving less than 100,000 a year, 15,385 during the selected period. And again, what this means, if somebody's bonused during this period, this is going to get capped. We get commissions during this period. So what we did is we totaled up the cash compensation, and this then actually goes to this Schedule A that everybody has to fill out. So you can take those numbers, and they came over here: cash compensation for those making less than 100,000, and the full-time equivalency. How many people was that? And that came off this detail schedule. Then we go down here, and we have a manager who made more than that, so we capped him at the cap. And we add that in, we total that up for our people that make more than 100K a year. And we put that over here, and that adds here, and their full-time equivalency. So we had one manager, we had 3.3 other folks. Then the next thing we do is we come down here and we then put in for owners and sole proprietors. Now, if you are a sole proprietor, this is basically all you're going to have to fill out. Right, and you don't have employees, you're basically going to put in either the amount you got paid or that 8 weeks of 2019, whichever is less, that gets plugged in here. And then that carries forward to the Schedule A. And so that is right down here, compensation to owners. So in blue, these things, one of my habits is when I have calculated stuff, I put them in blue, so hopefully people won't mess with them. So then we get to add in what were our employer contributions for health insurance, what did we pay, what was the employer contribution to retirement plans, and this would be like, what is the matching portion of a 401k? Now I'm going to swing back to this later. There's still some question about how to handle health insurance and retirement items for self-employed people and partners. It doesn't seem to be clear just yet. Question?
If owners have a salary less than 100K, but is more than 100K when adding shareholder distributions, are they still included in Schedule A?
No, it's just the payroll portion, not the distributions that don't go through payroll. So if you're an S Corp, this would probably be only applying an S Corp. If you're taking out payroll and then you're also taking some distributions out, which is typical of an S Corp shareholder or owner, you only count the payroll portion, what's going through payroll. And we've told some people, look, if you're actually, you shouldn't wildly adjust your payrolls during this thing just to get loan forgiveness. I go back to, again, one of the, you just don't want to be hoggish on these things. I think the mindset to have toward this PPP loan and forgiveness is that we want to be wise and be as aggressive as is prudent, but not overly so, because at the end of the day, if some of this has to be paid back, it was still a tremendous blessing to get a grant. And secondly, it's an awesome, 1% interest to get some working capital. So I think, again, don't leave money on the table. I'm not suggesting that, but I'm also saying don't go over the line. So if you were taking out a $50,000 salary and then you were taking out $10,000 in distributions, I think it's very defensible to take those 10,000 distributions and suddenly put them all in salary during this 8-week period, because that's what you were accustomed to taking out. I don't know how this is going to, when the banks start examining all the records, what kind of questions they're going to have. We've seen before in the application process, different banks handle things differently, and some had questions and some had different conclusions even. So there's still some guidance going to come out on this, I'm sure. But I think it's important to understand this, and I'll get to the main reason why in a minute. So we add all these things up, and this is total payroll costs. Again, cash compensation if you're making under. This is basically what's on that form. You're making over, add in this other stuff, compensation to owners, et cetera, et cetera. And then if you recall, we had that one person, we had a payroll reduction here. Now, this is a really important number here, and I probably should have really highlighted this. What is the average full-time equivalency during the chosen reference period? And again, this can be from February 15, 2019 to June 30, 2019, or beginning of this year. And let's say that it was 5. It was a solid 5 FTE. And suddenly here we're down to 4.3, doing the calculations with the 40-hour a week. That's an 85% reduction. And again, there's some safe harbors here. We'll get to that in a second. All right, I'm going to roll forward now. These numbers all roll forward to the actual application. So here we have the payroll costs. Again, that's this total right here. Everything I said goes into here. Health insurance, retirement plans, state tax. I mean, that's in Texas. That's your Texas workforce. I mean, what is that going to be? That's hardly anything. It doesn't include Social Security, Medicare, matching, FUTA. It's just state and local payroll taxes. So that's not much. So that number comes here. If you have business mortgage interest payments, and there's a question about this we'll come to later. In this case, I just threw in, hey, some business rent. And I said utilities. This is just a number. The instructions say that utilities include electricity, gas, water, transportation, telephone, and internet. I don't know what transportation means. I guess maybe transporting your utilities. I don't even know what that means. Then if you recall, we had this salary reduction for the person that had a 30% reduction in pay over the covered period. So the net allowable costs are at 61. And remember, our loan was 69. And sometimes that's the way the math works. You got to remember, you got 2.5 months worth of payroll from 2019. Now you got 8 weeks worth of payroll plus other expenses. So if you don't have a ton of other expenses, the math is probably going to mean you're going to have to pay some back. Okay, now this is where this is huge. Remember this full-time equivalent reduction quotient, where we came over here and we said, wow, we had 5, but we went to 4.3 when we did the math, and that's an 85. Look at that. I mean, that brings the amount that we can start talking about from 61 to 42. I mean, that's an 85%. So it's a 15% drop in what we can get forgiven because our FTE. So this, to me, is the most powerful, the most important thing to watch, and I'll cover this again later and emphasize it, is this full-time equivalent. And again, it goes back to the purpose of this loan was to help people keep their employees through this crisis. And, they're talking about restaurants, and restaurants can't reopen, but yet on the other side, we know some restaurants have just kept their people, and that was the whole point. And so you can get that forgiven if you keep paying your people. Anyway, all right. So then this means that, okay, so the next thing in the application says, okay, what was your loan? 69,000. I just guessed a number. I mean, educated guess based on the payroll numbers. And then you have to say, okay, this payroll cost, it has to be 75%. And the math is weird how they do it. They say take your total payroll cost and divide them by 0.75. And so that's the number that has to be related to payroll cost forgiveness.
Should that be a 15% decrease? Someone asked.
What's that? On this? Well, they're saying the math on there says take the net allowable costs times the reduction quotient. So you're getting 85%. So that should be 15% really, isn't it? Let's see. This minus this equals that. And this divided by this. So yeah, I mean, that is a 15% reduction. Same thing.
Staff reductions of 50%.
That's correct. Yeah. Yeah, because you go back to this. So the staff reduction is we had 5 people, now we have 4.3, and that's an 85%, 15% reduction. There you go. So yeah, it knocks $9,000 off what you could get. So anyway, what they're saying is, hey, your payroll cost, the 75% requirement, it should be 76,000. The forgiveness amount then in this form is the smallest of these 3 numbers. You can either get the whole thing forgiven, you can get the modified total after this, or you can get your total payroll cost at 75%. What's the smallest? Well, obviously it's this. Now, I want to show you what happens if we don't do any reduction in FTE. So right now, again, we've got 52,000. We have to take our EIDL advance grant. So we're really only getting 45,000 forgiven. We're going to have to repay 23,000 under this scenario. But if this goes to 1, it changes pretty substantially. Now we're at 61,000, and I'll just manually change 61,730. So now we're getting 54,000 forgiven. We got to pay 14 under this scenario, and half of that's the grant we got. So, any questions about this? We're going to be sharing this. It's actually, and I'll do a separate one for sole proprietors that's really, and partners, et cetera, that's probably really simplified down if you don't have other employees. And we also have to remember, if you took off a home office on your 2019 Schedule C, you should be able to pro rata take some home office expenses for utilities and et cetera. And then a lot of people on their Schedule Cs do take telephone and internet that's related directly to business, not under home office, but as an expense. So, we got to remember to account for these things properly. So I can come back to this if anybody has questions. I want to talk about safe harbors for the FTE. This is really important and some good clarification. You add back full, in other words, you don't subtract as an employee somebody that you made a good faith written offer to rehire and they rejected it. Make sure it's a good faith written offer and you have documentation that they rejected it. And by the way, people that do this are not eligible. It's been very clear. They are not eligible for unemployment. A lot of people have had to struggle with this because they added that extra $600 a week. So people are getting really nice checks and they're like, why do I want to come back to work? But if they're asked to come back and offered a job and they don't, they're technically not eligible for unemployment. But the good news is that you as an employer, you get to add that number back to your FTE. If you fire a person for cause, you don't have to count that as a reduction. You just need to make sure it's documented very well. Person that voluntarily quit or voluntarily asked for a reduction in hours, that should be documented. You should ask them to do that in writing. So you have the backup to show. So that's a nice thing to know. People have been concerned about, look, I've got somebody, either they quit or I needed to let them go and do I have to struggle to replace them right away? Well, there is a safe harbor, and you can actually just check a box and use the 1 instead of thing. And this is the safe harbor. If you reduced your employee levels from February 15th to April 26th, and you hire, so you're at the same level by June 30 as you were on February 15th, there's no reduction for this FTE modification. So those are really important things to know in terms of, again, calculating this FTE. And that's such a big driver. The number of employees is the big driver of how much of this loan is going to be forgiven in a lot of cases.
If someone is paid maternity leave, then they count the same as paid vacation or paid holiday. Is that correct?
Is this maternity leave? Is it family medical leave? Or is it just, they're on a paid, under a company, they have, what they've done is if is this maternity leave under the FMLA, or I don't know, we might need some more clarification on that. By the way, in terms of payroll costs, paid time off does count, vacation taken, it's gross payroll during this period. Not reduced for payroll deductions for health insurance or 401ks, it's gross payroll before taxes and all that, gross payroll. I thought this joke was funny that I found because I once put a bookshelf together in my daughter's for my daughter, and I was so proud of it. When I was all done, I'd followed all the instructions, and turns out I had a big part of it backwards. And it was one of those, if you take them apart, you're going to ruin it. So anyway, we got to follow the directions on these things and be knowledgeable about what's going on here. Everybody needs to read this. In fact, on here, there's some things that everybody's going to have to initial. You're going to have to answer truthfully about how you use the money. Go inside the application and read that. So what are you going to have to provide? There's a longer list inside there, but it looks like bank statements and payroll tax forms that overlap this. So that's going to be 941s probably for last quarter and this quarter. Texas workforce here, your state payroll tax forms, probably payroll reports showing hours worked or whether a person's full-time or part-time. For other expenses, bills and receipts and canceled checks, lease agreements, mortgage amortization and interest statements. So we're going to have a lot of documentation to send in with this application. So it's important to keep good records and bean count properly. I think the biggest takeaway from this is to do the math to know the reference period full-time equivalent. How many employees did you have last year during that one option, whatever it was, and the option this year from the 1st through February 29th. Do know what your target is. Go back and do the math carefully using the formula that we talked about. How many full-time equivalent employees did I have in the reference period? And then try and meet the safe harbor by June 30 by being able to rehire people if it's possible for your business. Carefully document the allowable exceptions if you don't meet the safe harbor so you can add back for people that quit or people that refuse to come back. And if possible, increase your employees during the covered period, so you get that back up the number of people you have on payroll. It's about the number of people on payroll. And wow, as you saw, just a 15% reduction for a $69,000 loan is $9,000 that you're going to end up paying back instead of keeping as a grant. So I think that's a really big takeaway. There's some things that are still a bit unclear in what I've read. The first is the treatment of self-employed owner and partner health insurance and retirement payments. It seems they're not allowed in the same way as they might be for maybe an S Corp owner or an employee. But there's some folks saying, look, if you're a person and you've got a SEP or something and you're paying in annually, can you take that 8-week portion of the SEP? You should be able to. It is a retirement payment you're going to make. And what about your own personal health insurance during this time that you pay for? Why in the world should everybody else be able to do that? So we're hoping some guidance comes out on that that's favorable. And there's another thing that the questions have come out on, and I see I forgot a quotation mark, but it says under the mortgage obligations, business mortgage obligations on personal property. I mean, to me, a mortgage usually means that it's tied to real estate, and it does mention real estate. We need to do some more digging to see if some of the interest on loans, this is all for loans that were in effect on February 15th, by the way, that maybe some business loans that were secured, if they were secured by equipment, for example, it seems to imply that might count as mortgage interest, the interest portion only, not the principal repayment. So if you have some business, we're going to look into this. We're always trying to come out with more guidance on that. There's one thing that's not in here. I thought and if you've got some more questions, there's another thing too. We've had some knowledge of some people that have gotten these EIDL loan offers, and there's a couple things I want to make clear about that. And we're gonna try and release a post on that pretty soon too. Some of these are up to like 30-year loans at 3.75% interest. And I think probably the smart thing to do is go ahead and say, yeah, let's do that, because who knows what kind of working capital you might need. And the reason for that is, I mean, it's probably not, you may not want to pay it out over 30 years, but there's no prepayment penalty. And so I think you need to consider carefully if the SBA does circle around and give you that offer. Also, I think if you get an offer that's not acceptable to you, and I haven't seen this yet, how to do it, but apparently you're able to go back and say, wait a minute, because I think this initial thing they're doing based on that first thing of how much your sales were and your cost of sales and what were they last year, et cetera, et cetera. And so, but I think you do have the option to go back and say, wait a minute, my business tanked. This offer is not going to help me. And and if any of you learn about some of that, maybe let us know. Any other questions? I hope this has been helpful. We'll make a copy of this. We'll put the worksheet up there. I'll leave this sample there, and we'll do a clean one that you can use. But again, I really recommend the first thing to do is do the math and know what your reference points for a full-time equivalent number of employees is, so you know what you still have some time here. It's you've got a month or so, hopefully. Well, more than that if you get to June 30 to do some things. Another thing I wanted to mention is if you did have to cut somebody's pay, though, and you do restore that by June 30, that too is supposed to eliminate that reduction. Okay. Any more questions coming?
For sole proprietor, does your quarterly tax payment?
If you took money out to make a quarterly tax payment, yes. I mean, it would be treated as owner's draw. So I think the important thing is you just make sure that you pay yourself, at least 8 weeks worth of your PPP loan. And so you make sure count it. It doesn't look like it has to be in any sort of a flow, but typically we've had people, if they've got it in a separate account, they transfer it to their business account and then transfer it to their personal account. It doesn't matter if you then want to take it and put it back in your business. That's your prerogative to do you can make capital contributions back to your business, but you should take it out as a draw payment. Because that's new language to me. Initially, it seemed to be clear that the only thing forgiveness was going to be based on 2019 Schedule C numbers, and now this says, or what's been paid, whichever is less. So it's pretty clear you need to have a trail showing you took money out of your business personally.
What does good faith safe harbor apply?
The good faith safe harbor is, again, if you're going to restore if your FTE was reduced from February 15th to April 26th, so you had to let people go because of this disaster, okay? If though by April 30th you have rehired the same number of people that you had on February 15th, that's the safe harbor that allows you to use basic 100%. You don't have to do a reduction in the amount of this loan that's going to get forgiven for the FTE calculation. So that's the safe harbor. Restoring your employment levels to what they were at February 15th by June 30th, basically, is a safe harbor. Any other questions? Okay, well, finally, then we thank you all very much, and we appreciate this opportunity. Again, we got to help each other. We support each other, and let's get through this unprecedented, challenging times. Difficult for people, but I think we can get to the other side of it. So hope you have a great rest of the day, and let us know if you've got any questions or whatever, and we'll follow up. So we'll go ahead and end it with that.